Yes, we expect the Hong Kong market to move sideways to slightly up over the next 3 to 6 months. Hong Kong remains a flywheel on global economic growth. And as long as the data from the United States continues to come out mixed, Hong Kong will be a bit volatile. Within sectors, we are less optimistic on Hong Kong property and more optimistic on Hong Kong consumption. So we're more focused on the consumption plays. In particular, some of the retailers, and also we're looking at some dividend yielders, in particular the utilities in Hong Kong, which are offering quite an interesting coupon. So I would say we're relatively sanguine, but at the same time a little concerned about Hong Kong over the next 3 to 6 months. I agree. I think equities will continue to benefit. I think the Fed has done an excellent job, as have central bankers, with this portfolio rebalancing objective that they've had, moving us out of less risky into riskier assets, and fund flows have followed. However, I do expect we should see a slowdown in that equity action, probably going into the beginning of the end of this year. We'll see a pullback in the markets, a little bit of uncertainty around the global economic outlook, and then I think a continuation of the equity rally into 2014. Yeah, the crude prices have been moving sideways. I mean, let's not forget for a moment that the world still consumes 91 million barrels of oil a day, so there is underlying demand. All we've done is put effectively a cap on prices, and as a result of it, crude has been moving sideways, both in terms of Brent as well as West Texas Intermediate. So prices are slightly going down. We've seen increased supply out of Iran. We've seen increased supplies out of Libya and now Venezuela, but ultimately, and Iraq, I'm sorry, and I think ultimately we'll start to see prices come off. But again, oil is still an important commodity for the global economic system. Well, I think it's easy. Generically, I mean, it's going to be equities in general. And I think within the markets themselves, I think you will see a rotation out of developed markets, continued into emerging markets. That has been a weak point. The emerging markets have been a weak point in the equity story. And I think you'll start to see a mean reversion rally as developed markets come down a bit and emerging markets catch up. Within the emerging markets, I think you've seen a rotation into North Asia in particular. China's starting to catch a bid, and India has been a very good story, as you and I have discussed many times.